Bitcoin's sudden drop below the $69,000 mark has effectively locked out retail traders who shorted the breakdown. Many who opened short positions during that move saw their stops hit as the price immediately reversed against them. This price action reflects a deliberate move by institutional desks to capture localized liquidity. The market maker drove the price into downside liquidity targets, clearing the board for a new immediate trend. A signal is currently forming on the XRP chart that hasn't appeared in months, suggesting a similar shift is beginning there. We will map the exact targets for the anticipated relief bounce and explain how to manage the current altcoin lag. Breaking a major retail support level often provides the necessary volume for institutions to build long positions. The previous support zone between 69,000 and 69,500 has been breached, meaning this area will now act as immediate overhead resistance. Under the Liquidity Magnet model, localized clusters of stop losses exert a pull on price action as large volume traders seek orders to fill their own. The drop to 68,000 was calculated to absorb a specific cluster of retail stop losses shown on this heat map. Because those orders have been filled, the primary catalyst for further downward movement in the immediate short term has been neutralized. Understanding this move requires a look at timeframe dichotomy, the reality that a macro downtrend can still contain significant micro rallies. On the weekly chart, the supertrend indicator, which combines volatility and price to define direction, remains red, while a bearish divergence suggests long-term momentum is slowing. Despite that, the weekly RSI is flashing an oversold signal. The RSI, or Relative Strength Index, is a technical tool that measures the speed of price changes to identify if an asset is undervalued. This setup mirrors mid-2022, when an oversold weekly RSI preceded a multi-week relief rally, even as the larger bear market continued. Entering trades based solely on the macro trend without accounting for these localized relief windows often leads to liquidation during short-term sweeps. This failure to account for multiple timeframes is a primary reason retail traders struggle during engineered market moves. On the 4-hour timeframe, a bullish divergence is currently in its formation phase. This divergence occurs when the price continues to make lower lows, while the RSI momentum indicator forms higher lows. This suggests that while price remains suppressed, the underlying selling pressure is exhausting after the $68,000 liquidity grab. Typically, this formation results in either a relief rally or a period of neutral sideways price action. Confirmation for this move depends on a volume catalyst, specifically the opening of the U.S. stock market. Historically, volatility in the S&P 500 at the open provides the necessary liquidity to push Bitcoin through local resistance levels. Over the next 12 to 24 hours, we expect price to stabilize as the market waits for traditional equity volume to enter. If the divergence confirms, the next significant resistance zone to monitor is located between 71,000 and 72,000. The combination of cleared downside liquidity and a forming divergence creates a low resistance path for a short-term rally. Trading these sweeps effectively requires moving on data before the broader market recognizes the shift. You can track these institutional liquidity maps as they develop by subscribing to the channel. Efficiency in execution and low entry barriers are necessary for capturing these volatile moves. 2bit is an option for this strategy because it is a no-KYC exchange, allowing for rapid account deployment and high liquidity execution. Using the link below provides access to a $3.5 million USDT price pool and up to 200 USDT in withdrawable stablecoin bonuses. Looking at Ethereum, the 3-day chart is currently reflecting Bitcoin's price action almost exactly. Ethereum recently faced a rejection at the macro resistance zone between 2,200 and 2,400. It is now contending with the 2,150 level, which has transitioned from support to resistance. The 4-hour ETH RSI is nearing oversold territory, which indicates that the immediate downward momentum is reaching a point of exhaustion. This proximity to an oversold state makes Ethereum a candidate for a bounce once Bitcoin confirms its own relief move. XRP has reacted to the current volatility by bouncing from the $1.37 support level. This move occurred as the 4-hour RSI hit oversold levels, a technical signal that has preceded relief bounces for XRP in the past. XRP faces overhead resistance between 142 and 147, with a macro floor sitting at $1.30.
Solana also saw a clean rejection from its resistance box at 8870 to 9070. Technical support levels to watch for Solana are now located at 8450 and 8150. Chainlink remains in a range-bound state, struggling with the $10 psychological resistance level. These altcoins are currently following Bitcoin's lead, as they currently lack the independent volume to diverge from the main trend. This brings us to a fundamental rule for this week. Do not short an asset with an oversold RSI while a bullish divergence is forming. Wait for the US market open to provide the volume necessary to confirm these technical setups. For a breakdown of the risk management framework used by institutional desks to protect these entries, watch the video on your screen. Securing a profit in this environment requires the patience to let Bitcoin confirm its divergence before committing to altcoin positions.